Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And as you can see, it's the options for me, okay? So this is gonna be another segment of our top 3 option plays for this week. So we're gonna go over a few profitable trades, stock fundamentals, and some option strategies that you can do to make it through. But first, if this is your first time watching this video, please make sure you click that thumbs up button. It really helps the channel. Also, make sure that you subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. Our first stock is going to be ACN. This is Accenture. It's in the technology sector and they do a lot of service and strategy consulting with a lot of different large companies like Adobe, Alibaba, Amazon Web Services, Cisco, Dell, and a lot more. And what I do like about it is it has a PE ratio of 33.28, which is a little bit overvalued, but not too much. I actually got this play off of Tiblio. So I found this off Tiblio, the earnings play screener. So make sure you check out Tiblio if you haven't already. I'll have that link below. So make sure you use my link. Like I said, ACN, it does have an upcoming earnings announcement on June 24th. And just looking at where we are right now is really giving, you know, a lot of neutral and bearish signals as far as the directional volume. And then looking on the market making move, it's expected to move almost 12 points. So it is expected to move 12 points by its earning the 24th. So this is that day. Looking right here, it's been pretty neutral. Hopefully it doesn't move too much, but if it does move, more than likely it will move in a bearish way, meaning down. Now, this stock does have a history of having really good earnings with an increase in the stock prices very soon afterwards. So let's just look back previously. Looking back here at the earning report back in December 2020, you see that they were expected to have $2.03 per share, but it was actually $2.32. So as you'll see here, the stock price really jumped, okay? I mean, it jumped from 247 upwards of 271. Okay, and then let's look at the next earnings. Let's look at the most recent one. This is back in March. Okay, so looking at the next earnings that happened around March, and they were expected to have $1.90 with the earnings, but it actually turned out to be $2.03. All right, and then you see right after this earning, you know, within the next few days, the stock price, and you see that it reached upwards of, you know, 278 very quickly. For this stock, it does have a history of increasing after earnings, but like I said, right now it's pretty neutral. And I don't know if you guys watched the last video that I posted about actually trading options during earnings, but for this play, make sure pause this video right now and click and watch that video if you haven't, because it's gonna kind of explain where I'm going with this. But right now, the type of move that I would want to do with this would be to collect a premium. And the reason why is because it has an earning report coming up, and I want to go ahead and I want to collect the most premium during this extremely volatile time. Okay, so for this, like I said, I'm bearish. I would want to do a call credit spread. Just looking at the stock chart right now, the RSI is very much so oversold. So for this particular setup, I would either do a call credit spread or an iron condor. Since it's saying it's expected to move about 12, so I would probably put my short call leg on maybe like 290, 292. So I would have my short call leg at 292 and I would buy one a strike price further up. And so you see from here, as long as this stock price by the 24th, as long as it stays where it is or below, then I would keep that entire premium. I just don't want it to, you know, go past around 290. Okay. And then the same thing, if I was going to do an iron condor, I would keep that same call credit up there, but then I would add a put credit spread down below. And then I would really just want the stock price to stay in between the two. So I might do something like 270, and that would be my short put, and then I would buy something there. So that's how I will be profitable with this trade. Like I said, I do want to collect credit for this. I want to collect the premium. Just works better for me. All right, let's go to our next one. But next we're looking at ABR, and this is Arbor Realty Trust. So it's a real estate lender company based in New York, and they do a lot, you know, they do a lot of stuff with multi and single family rental homes and stuff like that. So I like this stock because overall, as you can see, it is in an uptrend. It shows strong uptrending patterns for well over 3 months. And then just looking at previous price patterns, look at this RSI indicator. I mean, it's beautiful. But looking at previous price patterns, it'll be about 10 days or so before the next swing upwards. And then also it has a good PE ratio. Right now it's 7.06, so that would be considered a discount compared to the industry average of 19.31 right now. So overall on this stock, it's looking bullish, okay? And this is with fundamental and just looking at the stock market. They have a much higher volume on their ask versus their bid. So they have 1,300 on their ask, 900 on the bid. That's pretty good. The RSI has been a little bit oversold for a while, so it's been a little oversold since about the 15th. Now, what I would wait for right here is I would wait for the RSI to cross above this 40 range. So right now it's still fairly low. I want to see it cross there. I'd also need to see a cross with the MACD and the signal, and then the same thing with our EMA line. So this is what I'd like to see before I actually got into the trade. But for this, I'm fairly bullish on it overall. So my price projection for this is going to be around $20. That's a little bit higher than its recent high of 19. Just continuing on having those higher highs and higher lows that it's been doing for a while. So for something like this, I would do a long call or a put credit spread for this. And so of course with the long call, I would pick either an at the money, more than likely I would pick an at the money strike price with an expiration date of about a month or so out, and just hold on to that. For profits, I say at least about 10% to 30% profit, $17.50 strike price. And then if I was going to do a put credit spread, so you know a put credit spread is it's a bearish move. So I would probably have my short put maybe $16.98 to $17. That would be my short, and then I will buy out here. By the expiration, I don't know, it's kind of far out. I don't really like doing it that far out. If I was going to do, I would have to be a long call for that. So it could be 2 weeks to a month to hold on to this. So yeah, that's why I say pick an expiration date at least a month out. And so let's get into our next one. This is going to be KMX. This is the last one. Make sure you guys click that thumbs up button for me, and also leave a comment below if you think any of these stocks look good and what moves that you would want to do with them. So if you were going to do an option play, what would you do with these stocks? So this is KMX. I'm sure a lot of you guys know about it. This is CarMax. And it's one of the consumer, so this is in the consumer section of auto and truck dealership. And looking right now, it's giving me bearish tea, honey. Just look at it. It's just hit that high, drop. So it was somewhat giving uptrend, but she's not doing too much for me. It's giving downtrend. Kind of changed directions here from an uptrend to a downtrend. Now let's look at the fundamentals. I got this from Tiblio too, actually. CarMax, they have our earnings on the 25th. So this did come from Tiblio also. Just looking at their fundamentals, the PE ratio is cute, 25.4 with the EPS of 4, so that's not too bad. They have a higher volume on their bid, so that is a bearish indication. Its market maker move is 0, but I'm pretty sure it's gonna move somewhat. For a move like this, I'd be most comfortable with either a call credit spread or an iron condor. So its earning estimates have definitely dropped from May to August. And then even looking back at the last 2 earnings, like look back here in December, right after the earning, drop. And then when is this? March, look at that earning, drop. So they have an earning report also. It could continue on that drop move, okay? So the stock price has definitely dropped significantly afterwards, and it might continue to do the same thing. So for this, you can do a call credit spread, and I already kind of have it mapped out right here. My legs, my short. So the short would be the 120, and then I would buy 121. And that's another reason why our credit was so low for the last one, because the expiration date is so close. But for this, we get $20 each contract, so you can do 5 of those, get a quick little $100 credit, and just hope that this stock continues dropping downwards as it has for its upcoming earnings, and you just want this to expire worthless or at least decrease in value. So one thing with credit spreads, you can receive this credit of $100, and as long as it decreases in value, so let's say we got 0.20 for this, and then tomorrow it dropped down to 0.10. So you can buy that back for the 0.10, and you wouldn't keep as much of that credit back, but you still would be receiving credit and not losing. So that's one thing you can do for that. you know, slowly we're getting into bigger plays, bigger option plays, you know, and this is kind of really exciting. So that's pretty much all I have for this week's option plays. So let me know what you guys think about it. Leave a comment below and I'll catch you guys next week. All right.